Following heated headlines across gold and silver that drove long lines outside of jewelry stores, a contrarian signal emerged as per the Dow theory, confirmed by classical technical analysis patterns that drove a 300-point sell off across the charts that we witnessed this week. However, having demand and sentiment remain on hold. Looking at gold prices from a 4-hour time frame perspective, we can see that gold has formed a double top pattern near the 4,380 peak, pulling back towards the $4,000 support level that now defines two potential scenarios. A sustained move below the $4,000 level, which is a double top target and key support, could trigger another 300-point decline with next support levels near 3,920 and 3,780 respectively. Now, as price action remains above that target and yet still below the neckline of that respective reversal pattern, the bearish bias persists, and a clean break above 4,200 to the 4,240 zone is needed to reignite upside momentum towards levels 4,300 and 4,380, after which new record highs could be confirmed towards the 4,900 to the $5,000 barrier. From a monthly perspective, gold may retrace to test the upper boundary of a long-term ascending channel respected since 2016, a trend line connecting consecutive higher peaks between 2016 and 2020, lining with the $3,500 level. Now, this represents the extreme downside target for a momentum correction if prices close below the 3,900 and the 3,700 barriers, respectively. Now, looking at the silver prices from a 4-hour time frame perspective, we can see that price action traced a head and shoulders reversal pattern right below the 54.40 mark, which aligned with the 45-year resistance level on the chart extending from the 1980s. And that reversal pattern target extended the target towards the 47.30 support. Yet, if prices close back above the neckline of that respective pattern, which is the 50.80 mark, gains may resume towards key levels and new records with key levels inside between 52.40, 54.40, and 56.60 respectively. Now, from the downside and weekly time frame perspective, holding below the $47 mark could extend losses towards 44.40 and 42.90, lining with the trend line connecting consecutive higher highs between January 2023 and October 2024, setting up a potential bullish rebound. Overall, the primary uptrends across gold and silver charts remain bullish, in line with their historical structures. However, short-term pullbacks should be watched closely amid sensitive market conditions.